Invicta Holdings was formed from the merger of Invicta and Bearing Man and has a market cap of 6 billion rand. It is controlled by Cape-based investor Christo Wiese. Its a range of engineering products and agencies include Fena, Ferodo, Club Car and New Holland. It trades on a price to earnings ratio of 11.6 and a dividend yield of 3.2%. Invicta Paul, that P 11.6, so a lot of upside for this one.
Yeah, it's getting quite a lot of attention lately. It's interesting because it's certainly not a new business, and neither is its management team new or sexy or unusual. They've been there forever. Christo Wiese, who is the guy we're talking about, one of South Africa's most successful investors, is the chairman and the controlling shareholder. But Arnold Goldstone, the CEO, has been there since 1990. I actually went to the Bearing Man head office in Durban in about 1980 or something. And it was run by Greg Till, and it was a good little business that was basically buying up all sorts of little guys that had agencies to supply industrial machinery, ball bearings, belts and fans, and so on and so forth. So, it's gone from there. Invicta brought the New Holland, which is like an agricultural equipment brand from the Cape, and its head office is down there, but most recently it's done this deal in Singapore. It's got scale now, it's sort of 6 billion rand. It's starting to put its head out and it's starting to get talked about. And there's the share price behind us. We can see why it's being talked about. It's been going up.
Jean-Pierre, what do you make of that whole deal in Singapore? Would it be a kicker for the company going forward?
I think it's a very good deal. I think they got it at a very good price. They are paying significantly higher than the last traded price or the 30-day average price. But if you look at the financial statements of Kian and the Singaporean listed company, it's also a company with a strong heritage, management that's been around there for years, well positioned in terms of distributing vehicle parts or machinery parts into Southeast Asia. So it fits like a glove with the rest of the Invicta business. They're not overpaying. They're using very cheap debt, around 3% debt financing. So the structure of the deal, the size of the deal, about 1.3 billion, means that it's significant for Invicta. It's on good terms, though, so I like the deal a lot.
So Paul?
Well, I don't know. I mean, at the time of the deal, they indicated that they thought they were a little bit too big to do anything sizable or transformative here in South Africa. So that sort of makes sense. In other words, they're implying that they can go out and do little bits and pieces. They can buy, Club Car, the cars that just drive the golf carts, or they did another deal which I can't remember in the last couple of days. That's fine, and those are sort of bolt-on retailers or guys that have got 1 or 2 stores in Mozambique and Botswana and supplying some new component or additional product range which they don't have already. But to do anything really sizable, like buy one of their competitors that we're going to talk about here, would probably not be allowed by the competition authorities, or maybe there would be just issues in terms of scale and market share. So this does make sense for them to go international. They indicated they'd been looking at a lot of different deals and had only gone for this one because it was finally, the right price, the right team, the right sort of feeling for them.
It's been going on for about 2 years, isn't it?
Yeah, so I mean, I guess the issue then really is with the capital backing of Wiese and with the sort of ingenuity and the dynamic management team they're assuming can go and do other deals. Maybe they're going to buy something else in Singapore or, go into the rest of Asia. So, yeah, it seems good.
So, hot or not for you?
Well, it's certainly got some momentum. It's not expensive, so it's still a price-to-earnings ratio of 10-11, although back in 2009, these shares all traded at PEs of 5. So I'm a bit sort of concerned, but I do acknowledge that at this stage in the market, these sort of companies that put their heads above the parapet are certainly getting a little bit of institutional support. So I think, it's going to be hot and continue upwards.
Jean-Pierre, hot or not?
I also think it's hot. I really rate management, good management. The capital allocation has been very good in terms of growing businesses organically and acquisitively. On a divisional basis, also very good management in the 2 main divisions, Bearing Man Group and Capital Equipment Group. So with good management, good capital allocation, a high return on capital business, I rate this business, I would say it's hot.